All right, so today we're diving headfirst into Bosch Ltd's Q2 performance for fiscal year 2024-25.
Ah, yes, Bosch.
And we've got a mountain of data to get through.
We do.
Press release, investor presentation.
The letter to shareholders.
Oh, and even the full financial statement.
Standalone and consolidated.
So buckle up, folks, because this is your all-access pass to understanding,
Not just the what.
but the why
And the so what now.
of Bosch's latest moves. And trust me, there are some real gems hidden in these reports.
Oh, yeah, just glancing at it.
We're going way beyond the headlines today.
Absolutely. The first thing that jumps out to me right off the bat is that 6.4% revenue growth.
Oh, you're talking about that INR 4,394 crores.
Exactly. That's impressive.
Especially
You're
because,
sir.
yeah, given the context.
The auto industry has been kind of...
Well, it's been a bit sluggish.
Yeah, sluggish is a good word,
And then you've got the unpredictable rainfall.
which is never good for business.
Never good. But even with all that.
Bosch is still chugging along. Resilient, that's the word.
Exactly. Now, their pre-tax profit margin.
PBT.
Yeah, PBT. It's sitting pretty at 15.4%.
If we exclude
If we exclude,
exceptional items.
right, which in this case is the gain from selling off their
Oh, that OES diagnosis
the
business.
whole thing. But if you include that gain,
Then it bumps up to 16.5%.
not bad at all.
No, not bad at all.
But then we get to the profit after tax, the PAT,
Uh-huh.
and it's down to 12.2%.
Okay.
Now, that might seem a bit alarming,
Especially when you compare it to last year, same quarter.
which was a whopping 24.2%.
More than a double.
More than double. So what gives?
So those exceptional items we talked about,
Yes.
they can really skew the numbers.
Make things look rosier than they actually are.
Right, last year had some unique events
Some one-time boosts,
that inflated those numbers. Think of it like...
like finding a $20 bill on the sidewalk.
Exactly. Nice surprise, but you can't build a budget around that.
Right. Not sustainable.
Now, if we compare the first 6 months of this fiscal year,
To the same period last year.
the after-tax profit margin
Went from 17%,
down to 11.5%.
still a noticeable dip
It is, but it gives us a more accurate picture.
of the overall trend.
Exact.
Okay, so big picture.
Bosch is doing pretty well.
Yeah, they're holding their own.
But here's the thing.
What's that?
Bosch isn't just about cars anymore.
Right. They've got their fingers in all sorts of pies these days.
Diversified, that's the key word.
And does that diversification show up in these results?
Oh, absolutely, in a big way.
Like how?
Well, take their Beyond Mobility segment.
Uh-huh.
It's exploding, up 13.8%,
Wow, that's huge.
driven by
What's fueling that growth?
power tools,
Yeah.
security tech.
So are they tapping into that whole nesting trend
You know, where people are spending more on their homes.
and wanting to feel safe and secure?
Exactly. And that's smart.
It shows they're not just following trends.
They're anticipating them.
Now, even with all this Beyond Mobility stuff,
Their traditional business, the Mobility Solutions segment,
still a major part of the picture.
it is, and they're up 6.7% there.
Which, considering the challenges,
Not bad at all.
so break that down for us.
What's driving the growth within Mobility Solutions?
Yeah, let's get granular.
All right, so first up, Power Solutions,
Uh-huh.
5.7% growth there.
What's driving that?
Passenger cars, generators, and even higher exports.
Exports. Interesting.
Then you've got the mobility aftermarket.
Okay, so like,
People holding onto their cars longer.
and needing more maintenance.
Exactly. Lubricants, diesel components, all that good stuff.
That segment's up.
8.8%.
And we can't forget about the two-wheeler segment
Oh, the two-wheelers, they're zooming ahead.
with a 13.4% growth.
Yeah, that surprised me too.
So we've got Beyond Mobility doing great. Mobility Solutions holding strong.
And one more piece of the puzzle,
Hit me with it.
the consumer goods segment.
Ah, yes. Can't forget about that.
Up a solid 10.1%.
Really paints a picture of a company
That's not just surviving, but thriving,
across different markets.
even in this unpredictable economic climate.
So strategically, they're in a good place.
It seems like it.
But what about the nuts and bolts of their finances?
The nitty-gritty details.
Are they managing things well or
Are there warning signs flashing?
hidden in these statements?
Well, let's take a look.
I'm ready when you are.
From what I see, their financial management is right on track.
What makes you say that?
Well, their EBITDA,
For those who don't know.
which is essentially a measure of their operating profitability.
Yeah, how efficiently they're running the business.
It's up 14.1% for Q2.
That's pretty significant.
And what's driving that increase?
Yeah, spill the tea.
Two things, really. Increased revenue
Makes sense.
and a reduction in material costs.
So they're keeping expenses in check.
Exactly. Which is no easy feat in this economic environment.
Now, if we sneak a peek at the statement of cash flows,
There's one number that really pops out.
you're talking about that INR 12,925 million.
Generated from operations.
Yeah, that's a mouthful.
But it basically means,
They're sitting on a pile of cash,
right, a big financial cushion.
which gives them a lot of flexibility.
Your weather storms, invest in new opportunities, or
Sleep well at night.
it'll be very interesting to see what they do with this cash advantage.
Moving forward. All right, let's shift gears a bit.
Sounds good.
Let's talk about that investor presentation.
Oh yeah, those are always a goldmine of insights
These documents often give us a glimpse.
into a company's strategic thinking.
So, anything juicy in Bosch's presentation?
Oh, definitely, right off the bat.
Hit me with it.
They played a key role in launching the world's first CNG two-wheeler,
No way.
and it's equipped with their own engine management system.
Talk about innovation with a sustainable twist,
They're shaping the future of transportation,
especially in a place like India.
where two-wheelers are everywhere.
That's pretty cool.
Uh,
What else caught your eye?
well, they also helped develop the first gasoline direct injection engine.
For a major OEM right here in India,
Shows you they're at the cutting edge of automotive tech.
partnering with the big players.
And they're not just innovating in a vacuum.
They're actually winning awards for it.
Oh, the awards.
Tell me more about those.
Their Jaipur plant won an award for digital transformation,
Impressive.
and Bosch Ltd. As a whole
Got recognized.
for having a safe and secure office campus.
These aren't just participation trophies.
They show a commitment to technology and employee well-being.
So they're walking the walk, not just talking the talk.
It seems like Bosch is firing on all cylinders.
So what do you think their outlook is for the rest of FY25?
Well, the festive season is coming up in India,
That's a big deal for consumer spending.
and Bosch is in a prime position to benefit from that,
They've got plans to keep investing in cutting-edge tech
localizing more of their production.
and focusing on those high-growth areas.
They're playing the long game here.
Not just looking at the next quarter, but the next decade.
Exactly, and they understand that mobility is changing rapidly,
It's evolving.
and they're making moves to stay ahead of the curve.
So they're not just going to be a player in the future of transportation.
They want to be a leader.
Now, before we get into the nitty-gritty of their standalone financials,
I'm ready for those numbers.
I want to leave our listeners with a thought.
A thought-provoking question, perhaps?
We've seen this incredible diversification from Bosch.
From power tools to security tech to the future of mobility?
It makes you wonder,
Go on.
is Bosch on its way to becoming a dominant force?
Not just in mobility.
But in the broader technology landscape as a whole?
Now that's the million rupee question.
And to answer it, we need to dig a little deeper
Let's crack open those standalone financial statements.
and see what those numbers tell us about Bosch's trajectory.
I'm ready when you are.
All right, let's do it.
Okay, so let's dive into these standalone financials, shall we?
Let's do it.
Looking at Bosch Ltd's standalone figures, their total income for Q2 FY25 comes in at
Drum roll, please.
INR 46,032 million.
All right, let me grab my calculator.
We're about to do some comparisons.
Always fun. Okay, so comparing that to the previous quarter, which ended,
June 30, 2024.
Right. Their income was INR 44,961 million.
Upward trend.
They're definitely moving in the right direction.
And if we go back even further,
To the same quarter last year?
ending September 30, 2023,
Right.
it was INR 42,843 million.
So year over year,
A pretty significant jump.
considering all the economic what-ifs out there,
Exactly. It makes you think.
what does this upward trend really tell us?
It tells me they're not just surviving.
They're thriving,
A lot of companies are struggling right now.
but Bosch seems to be sailing right through it,
Their business model is clearly working,
generating more and more income.
even when things get a little bumpy.
That's got to be reassuring for investors.
Definitely a good sign.
Now, their expenses have also gone up, right?
That's true.
Statement shows total expenses of INR 39,260 million,
For Q2 FY25, that's correct.
but I guess not all expenses are bad expenses.
That's an important distinction.
So break it down for us.
All right, well, a large chunk of that increase,
It's coming from,
the cost of raw materials and components,
which makes sense.
it's a manufacturing business.
You got to spend money to make money.
Exactly. You need stuff to build stuff.
So rising material costs,
Something to keep an eye on.
but not necessarily a cause for panic.
As long as those costs are being managed efficiently.
And that's where the EBITDA growth comes in.
Right, even with rising costs, their operating profitability is up,
Shows they're running a tight ship.
making every rupee count.
Okay, Let's move on to their assets.
Sounds good.
As of September 30, 2024,
Uh-huh.
their total assets stand at a cool.
INR 185,214 million.
Whoa, that's a big number.
It is, and it's a noticeable increase from March 31st, 2024.
When their assets were.
INR 173,548 million.
So what's behind this growth?
Well, could be a few things.
Like what?
Expanding their operations,
Makes sense.
investing in new technologies,
Gotta stay ahead of the curve.
even some strategic acquisitions.
So they're playing offense, not just defense.
It seems that way.
Now, it's interesting to see how those assets are divided.
Yeah, the breakdown is pretty revealing.
They're non-current assets, things like property, plants, equipment,
Long-term investments.
even intangible stuff like patents.
All that comes out to INR 84,311 million.
A significant chunk of their total assets.
It really highlights how much capital they need to operate.
All that machinery and equipment.
Essential for making their products.
Plus, their financial investments.
Show they're thinking long-term.
Building a diversified portfolio.
Exactly.
Then you've got the current assets.
The stuff they can quickly turn into cash.
Inventory,
Nothing.
receivables.
Cold hard cash.
That total.
INR 100,903 million.
A healthy balance of short-term assets.
Absolutely. Gives them the liquidity they need.
To pay their bills.
React to opportunities.
Keep things running smoothly.
It's essential for any business.
Now let's flip the script and look at their liabilities.
The other side of the coin.
As of September 30, 2024.
Their total liabilities.
Come to INR 57,836 million.
Which is up from INR 52,916 million at the end of March.
So their liability have increased.
That's right.
What could be causing that?
Well, it could be a number of things.
Like what?
Maybe they're taking out loans to fuel that expansion we talked about.
Makes sense.
Maybe they have more outstanding bills because business is booming.
Good problem to have.
Or even changes in accounting rules
Always fun.
that affect how they have to report liabilities.
Ah, the joys of accounting.
But it's important to remember
That's it.
these standalone financials.
Only show part of the picture.
We need the full view,
Which we get from,
the consolidated statements.
which include all their subsidiaries.
All right, let's bring those in.
So what changes when we look at the consolidated statements?
Well, for starters, Bosch Ltd's total income for Q2 FY25 stays the same,
At INR, 46,032 million.
matching the standalone reports.
So most of their revenues coming from,
Their core operations,
and their total expenses in the consolidated statements.
also the same. INR 39,260 million.
No surprises there.
But here's where it gets interesting.
Tell me more.
Their consolidated profit after tax,
Which includes?
their share of profit from associates and joint ventures,
Okay.
is INR 5,367 million,
Slightly higher than the standalone profit.
which was INR 5,359 million.
So those subsidiaries,
They're actually adding to the overall profitability.
like a little bonus.
The consolidated view really
The
shows
power of diversification.
each piece contributes to a stronger whole.
Now, what about assets and liabilities in the consolidated view?
All right, so in the consolidated statements,
Yeah.
their total assets as of September 30th, 2024,
Okay.
come out to INR 185,167 million.
And their liabilities.
INR 57,837 million.
Those numbers are slightly different from the standalone figures.
That's because the consolidated statements,
Include all the subsidiaries.
sometimes those subsidiaries can offset,
Or balance out what's reported at the parent company level.
leading to those small variations.
It's like we're putting together a giant financial puzzle.
Each piece gives us a different perspective.
And when we combine it all,
We get the full picture of Bosch's financial health.
love that analogy.
Yeah.
But we're not done yet.
Nope, we've still got one more piece of the puzzle.
You're talking about the letter to shareholders.
The letter, exactly.
We get to hear directly from the leadership.
Beyond the number.
What kind of message are they sending?
Well, right off the bat,
They acknowledge the challenges,
the global economic headwinds.
the uncertainties in the auto industry,
They're not sugarcoating anything.
but they're not panicking either.
Not at all. They're emphasizing their resilience.
Their ability to adapt,
They're confident in their ability to deliver
high-quality solutions.
that meet customer needs, even in a tough market.
So it's a message of
Cautious optimism.
backed by a strong track record.
They're also highlighting their commitment to innovation,
Investing in new technologies,
localizing production.
they're not just reacting.
They're shaping the future.
And they specifically mention the sale of their...
OUS diagnosis business.
Right. They're framing it as a strategic move.
To focus on their core strengths.
And areas with the most growth potential.
Sometimes you have to let go of the good.
To make room for the great.
Exactly, and it shows they're not afraid to make tough decisions.
Another sign of strong leadership.
Oh. Now, one thing that really stood out to me.
What's that?
They're clearly proud of their role in launching
the world's first CNG two-wheeler.
With their own engine management system.
That's a big deal.
A testament to their commitment to sustainable mobility.
And their ability to innovate.
In a way that benefits everyone.
And let's not forget their contribution to developing
the first gasoline direct injection engine.
For a major OEM in India.
Showcases their technological capabilities.
And their ability to partner with industry leaders.
Plus, they're winning awards.
For creating a safe and positive work environment.
That Safe and Secure Office Campus Award
really shows they care about their employees.
Not just profits.
All these achievements,
combined with their solid financials,
paint a very positive picture.
They're not just surviving, they're thriving. Embracing innovation, diversifying, managing their finances wisely.
It sounds like they're well positioned for success.
No matter what the future holds.
So where do we go from here? We've crunched the numbers,
analyzed their presentations,
peeked into the minds of their leadership. We started off asking if Bosch is going to be a big player in, like, the whole tech world, not just cars. What do you think after seeing all this?
Well, they're definitely doing things right. It's not just that they're trying out these different tech sectors. It's that they're, like, all in.
Yeah.
Real expertise, power tools, security, now even that CNG two-wheeler.
Sustainability angle.
Huge.
Yeah.
That's what's going to matter, being able to change with the times.
It's like they know what's coming next.
Almost a sixth sense for where the market's going.
And being ahead of it.
Exactly. And that whole sustainability thing, that's giving them a real advantage.
Consumers are getting more aware.
Way more. They want to buy from companies that, care about the planet.
And Bosch is showing they get that.
It's not just good ethics, it's good business.
So we've covered a lot of ground here with Bosch.
We have Q2 performance, the whole 9 yards.
Crunched the numbers, looked at their game plan.
We even got a sense of what their leadership is thinking.
It's been a wild ride, but honestly,
it's been fascinating.
I'm more impressed with Bosch now than when we started.
They're not just car parts anymore, right?
They're a full-blown tech powerhouse.
That's a great way to put it. Rich history, doing well now. And the future.
Looking bright.
Very bright.
But this deep dive, it's just a taste,
It's an appetizer.
We really want you to check out those source documents.
Dig in yourself, form your own opinions.
What does the future hold for Bosch?
It's a question worth pondering.
One thing's for sure. In the tech world, you got to keep learning.
Never stop adapting.
And Bosch, they're showing everyone how it's done.
Masters of the game.
Thanks for joining us on this deep dive into the world of Bosch Ltd. Until next time, stay curious.